Hi folks, Nick Shaheen here, recapping week ending January 2nd, 2015, first day of the year, trading a short week. Scoreboard today, red, except for the Dow. Dow barely up, 0.06% positive. SPX barely down, 0.03%. NASDAQ down 0.14%. 0.5% down on the RUT. IWM a little worse, but it could have been a lot worse. Why do I say that? If you look up here, that's the recap of the day. Right here we have the ES Mini opened, ripped up into the open. The pre-open was very positive, up 12 points, I think, last time I checked. Slide all the way down to almost the lows of the day, meandered a little bit, slid to the lows of the day. This is almost 30 points, almost, not quite. That's impressive. And then we tried to rebound, and then we tried to rebound, but closed weak, red. I thought for sure we were going to close green here, but they couldn't do that. Even worse picture in the small caps. Look at that slide. And from the highs to the lows, we were 1211 to 1180, 283. So it's an impressive day on the downside, but off the lows, which is pretty important. The Nasdaq was not happy either. So oil was down. That's probably the reason why. Not sure. Although all day it was almost up and then it recovered, so not quite. It may have started the drop right here, but it didn't finish it. More likely, we had a strong bond market, up 1%, a weak 10-year rates down 2%. So the combination of those two, I expect red markets, and we did get them. I didn't expect the VIX being down 7%, which is kind of a joke because it was down 10% earlier and then up 5% and then ended up closing this red on a flat market. That doesn't make sense. So the VIX is kind of broken. Um, People will blame it on expiration. We had two expiration days back to back. We had the weeklies, I mean the quarterlies on Wednesday and today, the weeklies. And so maybe Monday will be a little clearer. Coming into Monday, the obviously today's market action is not going to make anybody happy. Absent any headlines, we're probably going to start to line up a heavy week next week as far as economic reports are concerned here, and more importantly so abroad in the Eurozone, because the Eurozone, they also have good economic news coming out, well, at least good amount of it, not necessarily good. And the news will either strengthen or weaken Draghi's hand into convincing the ECB to do a QE coming and announcing it in January 22nd. Chances are we will start pricing in some sort of an expectation of something coming down the pike or something not coming down the pike on the 22nd. I don't know if they're going to give him another pass to Draghi with just more words. They may revolt on another set of promises that he's been given for over 2 years now. Kind of like what happened to Amazon. Everybody gave it a pass, 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 pass on profitability until one day they said, you know what? No more. Show me. They may do that with Draghi, which scares me on the long side. All right, so what to expect next week? More of the same, joshing for position. I don't expect fireworks. The open interest tells me that the market wants to be closer to 2025 than 2100. So I'm not chasing any longs. Any pops that happen without reason, without change of fundamentals, are shortable in my opinion. My personal portfolio is mostly shorts, and today I added a few longs just to hedge some of the shorts, and I booked a lot of short profits too. I'm not doing anything big. I don't think anybody should do anything big. We have a few good stories going on. GoPro is really green. I believe they have some sort of presentation next week. Maybe they announce something, drones, whatever. But up 5, almost 6% today. I can't chase it up there. Twitter, here, let's look at GoPro while we're talking. GPRO. Okay, so now I want to see what it does here. Okay, but I'm not compelled to chase it. I traded it between these two green lines. I'm not compelled to do anything else for now on the sidelines. Twitter is a long-term, plug your nose, take it long via, I don't know, calls way out in time. Same story with Baba. Alibaba got a scare today, but held okay. Apple foretold on Wednesday and of a drop today delivered. The drop down almost 1%. So there are some good stories that I may try to catch. I'm not catching anything right now. I'm merely hedging my shorts, and that's it. So there's nothing to be done, that nothing that needs to be done that cannot wait another day or two with a little more clarity. I just want to see what sentiment is like. Markets are trading sentiment. I want to see what the sentiment is like. And let me show you that in pictures a little bit, okay? So now the SPY. This is the 1 year daily. Every candle is 1 day. And lower highs, and this green line stands for 2 years except for this little poke right here. So we just tested it again. Are we coming down to test it? Maybe, maybe not. I'm not foretelling doom, but it could be possibly that we're headed down there. One thing is for sure, that this one red line here stood. And we'll see if it's going to be tested again. So the 208 line has been solid. And this is on good volume too. So let's look at the IWM, which is the small caps, which have been mentioned as being a canary in the coal mine. So today they did a few things. One is they fell badly, but the good thing is that they left that little tail that bounced off of what used to be resistance. See that green line? How it was resistance today, it acted as support. Will it continue acting as support? If not, then we may be coming back to visit this blue trend if I extend it up to here. I'm not calling it yet, but I'm also not calling that the 120 has been busted. We've had two closes well below the 120 on no news, so that worries me a little bit. Was this rise too frothy? That ascending green channel remains to be answered. This is on even heavier volume than the day before and the day before. Those are two concerning. Those are concerning points. How about the Nasdaq? Did it look any better? So let's flip onto the Qs. The Qs, the range is tightening. You see, it looks like a beak. It looks like we want to test the bottom end of that range, ascending, although higher lows, which is good. But we also have had 4 lower highs, which is not good, and definitely 4 lower closes, which is not good. 3 lower closes from the fourth one. So there is a range and it's tightening, and when we come to a point-ish, we're going to have to decide whether we're breaking out and revisit the highs, recent highs, not all-time highs, or we're going to break down and then this may come into play. So caution is definitely warranted, as somebody asked me today. All right, so these are what happened as far as scoreboard. Let's see if we can look at something different in the pictures of the weekly. These are weekly candles, 1 year. And if I go to the Qs, which we were just looking at over there, to see if I can decipher anything different from less noise by looking at weekly, not much. It's tightening. So let's go to the SPY. Tightening, but I can. It's easier to see a lid. And what are we going to do with that lid? Okay, and we had a lid here, we had a big red candle, and then we bounced. Is this that same scenario, or is this a lid, big red candle, and then we had a downside? So a little too soon. I need to see more price action. Next week should be telling. Okay, IWM, those are the small caps. We also looked at them on the daily. Now we visit them on the weekly. Boy, yes, that's a big red candle and still indecisive. It's a broadening formation, which is usually bullish, especially if you pierce it and close higher. It may want to just bust out, but this week definitely casts some shadow on that. And given that it's been, look at these similarities here, it's been choppy. I'm not one to start to jump the gun and go long based on just that little breach. So I'm patiently waiting, cautious waiting, taking some longs to hedge some shorts, playing the ranges, using the options market, not overcommitting to one way or another, and that's the best way of playing this market. Nick Shaheen signing out.